Hey everyone, thanks for joining me. It's Eric with HeyEric.com recording another video. This time I wanted to talk about what just happened to Zillow and what it tells us about the housing market. Is there a crash coming and why did Zillow do what they did? So thanks for joining me. So in September, we got housing starts number. We get them every month, and in September they dropped. This is the first time they've dropped probably since the pandemic started. So multifamily dropped 7.7% and single family home dropped 1.6%, which is almost flat, granted. But still, things are slowing down a little bit, and why is that happening? So the day after these housing start numbers came out, Zillow announced that they're no longer going to flip houses. And that's what we want to examine. What is Zillow telling us? Do they think there's market headwinds ahead? So even though September new housing starts are down, we know they've increased throughout the pandemic just because demand's been so high. It's important to remember that because we've also gotten a lot of reports about foreclosures jumping and people that are advertising that or using numbers during the pandemic. At the beginning of the pandemic, forbearance, the federal government rolled out this forbearance program so you didn't have to, pay your mortgage if you weren't working because you were staying home for the pandemic. And so a lot of these, videos, big titles say, they jumped, let's see here, 32% in Q2 and 60% or higher from Q3 2020. So over the last year, foreclosures have jumped 67%. But we know that in Q3 2020, a lot of people were in forbearance and they weren't required to make their mortgage payment. And now that they've exited forbearance, maybe things are starting to happen. So let's look at this graph that's on the screen now. So right here we have historical foreclosures since 2005, and you can see this big spike, and that was the Great Recession, 2008, 2009, 2010. And since then we've had a very steady decline in foreclosure activity. And then here we have 2020. And as soon as the pandemic started in early 2020, forbearance occurred. The federal government approved that and it started happening. So with this graph that we're looking at on the screen, the broader trend of this decrease is still very accurate and relevant, even in Q3 or where we're at now in 2021. So let's jump to a story from the same data company, AdamData.com, where a lot of this stuff where I'm pulling it from, it's super useful and helpful. So now we talk about, what's going on with foreclosure activity. In here, they mentioned Realty Track, which is a website which is the largest online marketplace for foreclosure and distressed properties. They released Q3 2021 info showing about 45,000 U.S. properties with foreclosure filings. Realty Track is pretty aggressive with this. They do default notices, scheduled auctions, or bank repossessions. And they mentioned this big jump from a year ago, which we've already kind of addressed that, talking about how things were in forbearance last year. And then we skip down here to the lender portion. Lenders started the foreclosure process on 25,209 U.S. properties in Q3 of 2021. And then they talked about the 32% increase from the previous quarter, 67% from a year ago, like I mentioned earlier. But still, let's do some math and let's annualize these. And we can see that, with Realty Track showing 45,000 in filings, if we annualize that times 12, it's about 540,000 annually. We go use the lender's number and 25,000 for the month, annualize that, and we're at 300,000 annually. So 300,000 foreclosures is what the lenders are advertising or telling us in this data. So if we jump back to our other graph now and we think about that 300,000 number that the lenders are reporting, in 2019, which is well before the pandemic ever started, they reported 493,000 foreclosures. So let's compare that year over year, going from 2019, which there was no pandemic, to annualizing the worst month since the pandemic started. So 300 which is what the lenders are showing now, divided by 500, it's 60% of pre-pandemic levels in 2019. So we're still up a little bit, but we're still on this long-term downward trend. And this could change, as people come out of forbearance, maybe we get more filings, but still it's important to remember that just because a person leaves forbearance or gets out of it, finally starts paying their bills again, doesn't mean they're going to sell their property. They have to go through some big income shock that's going to cause them to sell their property. People just don't want to sell, and especially in this aggressive market where things have been going up, they're not going to be foreclosed on, because if they need to liquidate, they can just sell. So it's important to remember that. So if looking at this data, we don't think there's going to be a crash, why is Zillow getting out of the home flipping business? We know this is kind of it's one of their core businesses while doing a lot of other stuff, but if they leave this business, they're just leaving it wide open for their competition like Open Door, Redfin, OfferPad, all those types of businesses, and also the locals that do it here locally in Utah and across the country. When October 18th, this is when they announced that they weren't going to do it anymore. We have here, we're operating, this is an announcement from Zillow, we're operating within a labor and supply constrained economy inside a competitive real estate market, especially in the construction, renovation, and closing spaces, says their COO. We have not been exempt from these market and capacity issues, and we now have an operational backlog for renovations and closings. So they've gotten all these properties, they're working on them, but they're backlogged on renovating them and then selling them. So pausing new contracts, so not buying any more flips, will enable us to focus on sellers already under contract with us and our current home inventory. So it looks like Zillow's having the same issues as everyone else. They got labor shortages, they got supply issues, things like that, and they got too many houses that need to remodel. This also tells us what's going on with the new housing starts. Housing starts are slowing down because of these same issues. There's only 10 contractors out there, we really need 20, those 10 can't do the work of 20, so this is going to be an issue for a while, and so that's why Zillow is stopping buying houses. We see a lot of these labor shortages, with the new child tax credit that's coming out monthly. People are getting paid a paycheck monthly from the federal government. This might be causing a household that normally had 2 parents working, going back to the 1 parent working idea. And just we see, household savings rates super high right now. Throughout this pandemic, the government has been handing out a lot of money, which has had some negative consequences on the economy. But because of that, there's a big labor shortage in our market right now. Based on this announcement from Zillow, we saw their stock drop over 9%. So let's look at the numbers. In Q2 of 2021, they acquired 3,805 properties. So Q2, that's April, May, June, and over 3,800 properties. In all of 2022, they acquired 4,162 properties. So just in one quarter this year, they acquired as many as they did last year. So I'm thinking back in 2020, during the beginning of the pandemic, they're like, let's ramp this up. It's a good opportunity. There's a big housing demand, lots of housing demand. Obviously last fall, it's really started skyrocketing, not expecting the labor and the supply shortages of goods. So it really looks like Zillow is taking on more than they can handle. They don't have the labor, they don't have the supplies, and they got way too many houses to get done. So what's really holding Zillow up to get this done? They have their holding costs. They buy a house from someone, they have to hold it for 6 months to get it remodeled before they can get it back on the market. They also have advertising costs. They pay a lot to advertise to get people to sell them their houses, just like all their competition. And then another headwind that they might be worried about is what happens if the Federal Reserve actually raises rates. We know they decreased them. I think they dropped them almost to 0, the Fed funds rate, at the beginning of the pandemic, just to stimulate growth, stimulate spending, things like that. But if, as the Fed's announced, they're going to start raising them next year, what's that going to do also? Because as rates rise, typically home prices go down, demand goes down a little bit, so there's a little bit of negotiating in there. So the Fed has already said they'd raise rates towards the end of 2022. And if inflation keeps going up as it's been, they might be even sooner. They also said the following year in 2023, they would raise rates probably twice, and in 2023, 3 times. And that's typically by 0.25% increments, real slow and steady to the Fed's funds rate. So the real recipe for disaster for Zillow is, let's say, rates actually do rise quicker, and they're still buying homes at that rate, let's say 4,000 a quarter, so 12,000 for the year, and they still can't get contractors, they still can't get supply, and they're stuck with holding all these houses, their holding costs. Maybe they turn off advertising, but the holding costs, the rate rise, which could affect mortgage rates, and they're just stuck paying for that. So it just sounds like an unprofitable business for them. So the good thing for Zillow is they have a lot of cash on their balance sheet. They're well capitalized, everyone loves them, but it just sounds like they're running a bad business right now. It just didn't work out how they were expecting throughout the pandemic. So I really think what Zillow is doing is not really marking or telling us that there's a top to this market. It's just them making a good decision. You know, they report to their shareholders. They don't want to have this unprofitable business on their books as much as possible. So they put a pause on the buying, they play catch up with all their current inventory, remodel those, sell those, and then they can just either be done with it or they can reevaluate and start over. But at least for their shareholders are happy. Now you've heard my opinion on what's going on in the market and why Zillow might have done this. Obviously their stock has already pretty much bounced back, but this is just my opinion. Let me know what you think. If you have any questions, reach out, and thanks for watching again.